Welcome to the Personal Pension Radio Podcast, where it's all about helping you complete your financial journey to retirement. Discover time-tested strategies and get unconventional insights into wealth building and retirement that actually work. Break away from the herd and go for the retirement you dream of. And now, here's your host, the income engineer, Kraig Strom.
All right, back on Personal Pension Radio and on YouTube and Facebook and LinkedIn. I am doing my best to make sure that I actually record video and audio. I've got to follow the rules of podcast marketing. You've got to have multiple places that you can post your content. So wherever you're listening to this, thank you so much for joining me again on Personal Pension Radio. What are we up to? Episode 235. I really appreciate it. Technically, it's episode 200 and I think maybe 240. Over the years, I've had to amend and adjust certain podcast episodes because of my compliance, because I am an actual certified financial planner professional. So I've got compliance regulatory issues, and there's been a few podcast episodes over the years where I just didn't want to go back and edit and redact and change and do all this stuff. It's kind of crazy. So some folks have actually mentioned that in the comments and emails that they've sent me saying, hey, what happened to podcast episode number such and such? That it ultimately got taken down because I didn't want to go back and re-record it. So, opening thought today before I jump into the podcast, I was thinking about the mission of Personal Pension Radio, this show in general. And yes, it is true that I really do want to help people with that retirement income dream, that retirement planning dream. My focus as the income engineer really came out of the realization that Wall Street just does not teach retirement income. That is just not a focus of the Wall Street retirement planning education model for financial advisors and financial planners. And I want to teach that. I want to help people maximize retirement income. But if I'm honest with myself, the real mission of Personal Pension Radio is to build a relationship with the listener, with you, the viewer, with the listener, that over time, you might have the opportunity, the audience might have the opportunity to get to know the financial planner and someday actually contact a financial planner. Whether it's me or someone like me, it's important to understand the relationship is first. You've got to actually understand who that person is. You've got to say, hey, do I click with that person? And when I'm thinking about the actual mission of Personal Pension Radio, or the driving force behind it, I've really had to do some soul searching and think that the real reason for all of this is to build a relationship with the audience and, yes, unabashedly say I would love to work with folks who are interested in retirement income planning or updating their estate and living trust and plans or life insurance discussions. Absolutely, I would love to work with folks. And you, if you're listening, I'm out here raising my hand all the time. You've heard me say it if you've listened to my show. Kraig with a K, Kraig at kraigstrom.com, right? But the reality is, I need to build a relationship. I need to make sure that I can establish that connection, because some people just will not click with me. I am who I am, right? That's the whole Popeye thing. I am who I am. I guess that's the way it goes. The point I'm trying to make is that I really appreciate the opportunity to do this, broadcasting from my workshop here in sunny Southern California. Got my latest project. My latest project in the back is a large custom comic book storage cabinet for a friend. Somebody asked me if I could build that, and I said sure. So the next thing you know, I'm building a comic book storage cabinet. So I love the opportunity to be here. I really appreciate you listening to this, wherever it is that you might be pulling in this content. And if you have any questions about your personal financial planning or estate planning, If you have legal questions, you can put those to me as well, because I am a paralegal at a great law firm, and I'm also a certified financial planning professional at a financial advisory firm. So I can help and work through a variety of different questions that folks might have. And thank you again for joining me on the journey. All right. Now, quick disclosure, so I don't forget my disclosures. I am a certified financial planning professional for sure, but I am not an attorney. I am not a CPA. Please don't act on things that you hear from me on this show as if you're getting personalized advice in your specific situation. And especially, please don't act on things that you hear from financial entertainers. Those are folks that have no licensing to actually practice as financial advisors, investment advisors, planners, etc. Please contact, hopefully, a certified financial planner to go over your specific situation. You have a very unique situation. Make sure you actually talk to somebody about your situation before you act on things and actually, start doing anything, right? Now, if you have a need, if you'd like to ask a question, you can always send them in. I'm going to go over some questions today from listeners. You can send your questions to me, Kraig with a K, Kraig, at Kraigstrom, STROM.com. All right, now, let me jump in. I actually have a segment that I go over on a regular basis, and I wanted to touch on it because somebody asked me they ask me questions all the time. Are you always hunting for a deal? Yes, I do enjoy hunting for a deal, but I'm not always hunting for a deal. Somebody actually made a comment that, man, it looks like you're always trying to find a reason to spend money. No, I actually am often procrastinating spending money, maybe too much. Sometimes this is my deal of the week segment, and it's a response to a question that I got about, sounds like you spend an awful lot of money or awful lot of time trying to save a little bit of money. Well, sometimes I save big money, and it's definitely worth the time. I will admit, however, that I am guilty of spending too much time looking for a deal on something that is really not that expensive, and my time is far more valuable, and I'm guilty of it, like I said, of spending too much time, valuable time, trying to save $20. That's something that I have to be mindful of, because I get so into this idea of hunting down that deal of the week that I end up spending too much of my time surfing Facebook Marketplace or Craigslist. So my deal of the week tip or caution this week is, please don't spend excess or inordinate amounts of time trying to save $10 or $20. Really stop and evaluate, how much is your time worth before you get into trying to spend $10, right? Or trying to save $10. Just a quick tip, because I found myself doing that. I went down the Facebook Marketplace rabbit hole the other day, and I remembered this question or this comment that someone had made. So take it for what it's worth. Try not to spend $50 saving $10, right? It's $50 worth of your time. Now, let me jump into Watch Your Step. This is a segment that I continue to keep in my podcast, in the structure of my podcast, because I think it's really important. The idea that there's so much information out there, and oftentimes that information is very conflicting. You'll have one advisor who will suggest one thing, and you'll have somebody who will suggest another, and you've got to pay attention so you don't step in it. You got to make sure that you don't step in it and end up in a situation where you made a very expensive mistake, for example. So here's the situation. I may look at my notes and make sure that I follow through my thought process on this. And yes, I do actually take notes. I do actually record on a podcast app in my iPad and record on my phone with a cool little setup. Someday I'll actually take a picture of my whole setup for everybody. I've had a number of questions from listeners and friends and people on LinkedIn. What does your podcast setup look like and how much did that all cost? I'll tell you right now, it didn't cost a ton of money. it costs less than some podcasters spend on just their microphone. So I got off track down a rabbit hole, right? So watch your steps. So this came up. It was regarding a reverse mortgage. So I had a call from a friend, and listeners will know that I'm a big fan of reverse mortgage in general. Big fan of reverse mortgage in general for seniors over 62. I think that when it's used correctly, and specifically my mom has a reverse mortgage, and I've told the story about that, and I've interviewed Pete Tentler a couple of episodes ago. Great interview if you want to learn more about reverse mortgage. But it's not the end-all, be-all for seniors. I'm a big fan, but a friend of mine introduced me to his mother recently. And mom had gone through a divorce. Mom lives in Florida. Mom had gone through a divorce several years ago, and part of the divorce settlement was that I think it was within 5 years of the divorce being finalized, she would have to sell the house that they had lived in together as a married couple. She would have to sell the house or come up with a substantial amount of money to give her ex-husband to pay him back, basically the equity that was left in the house. They had an agreement. Well, fast forward 5 years, and the house was up for sale earlier this year, and whammo, coronavirus. Coronavirus, the big pandemic happened. The market really dropped significantly for housing values, and sale activities fell off in a crazy way. So the ability to come up with that, I think it was about $150,000. I think I had made notes, about $120,000. It was $120,000 to settle up this deal. Well, Mom doesn't have $120,000 sitting in the bank account somewhere. She has an IRA, but she doesn't want to take advantage of being able that whole penalty-free withdrawal coronavirus relief act. She really thought she was going to be able to just get the house sold and move into a less expensive place to live anyway. That didn't happen because coronavirus came in and just threw a big old monkey in the wrench, right? Yes, I did twist the words intentionally just to see if you were paying attention. So she looked into her solutions, right? What could she do? She can't really sell the house quick enough. She thought it was going to go fast. It did not. It actually fell off, and she got, now she couldn't have an open house the same way. Everything went bad. So someone that she knew actually said, well, what about one of those reverse mortgages, right? So what about one of those reverse mortgages? Well, again, I am a big fan of reverse mortgage, right? But Mom, was not. She had heard all kinds of negative things about reverse mortgages and just myths and things that aren't true. And she said, I don't know, but I guess. So she met with a reverse mortgage advisor, and the reverse mortgage advisor went through and basically sold it all up. The reverse mortgage is awesome. You don't even have to go through the mortgage process like a regular mortgage. Oh my gosh, it's going to be great. Tax-free. We're going to give you the money. It's going to be excellent. Yes, it could work. Thankfully, Mom, right, she expressed some concerns. And she came back to her son and said, I'm not sure about this. The son said, hey, you know what? How about you just have a conversation with Kraig? I know Kraig, and you could actually go through. And by the way, I just said that. That's interesting that I say that. I know Kraig. Her son is a podcast listener in the audience. Steve, hello. And he said that. He says, I know Kraig, because he's listened to this podcast well enough that he knows what kind of person I am. He has a vibe for who I am. And he said, maybe you should contact this guy, the income engineer, right? So that's what she did. We got on the phone together. We were chatting about things. And as it turns out, I had to say, after a bit of time, we went through about 30, 40 minutes of just making sure to fully understand her situation, how much cash she has in the bank, where her money is, where her income is, what her plans are. And I had to say, no, reverse mortgage did not sound like a good idea at all, right? It just did not sound like a good idea at all, because this home was not her forever home to begin with. She wanted to move. It wasn't just a matter of, I got to give this ex-husband some cash. It was she wanted to move. So one of the primary rules, if you will, to follow, that I was taught many, many years ago that I follow with clients is try not to take a mortgage of any kind on a home or a refinance or a new mortgage on a home that you plan on leaving in 2 years, because a new mortgage is going to cost usually, $5,000, $6,000, $7,000, $8,000. Who knows what the cost will be? A reverse mortgage will cost more. Reverse mortgages generally cost more to originate for a variety of reasons, insurances and things like that. I always say that reverse mortgages generally cost more for a big reason, that the mortgage company doesn't get paid until someone dies. They don't get any income on the mortgage itself until someone dies. So reverse mortgages are generally more expensive. And in her case, the reverse mortgage was going to cost $15,000. Almost twice what it would have cost for a standard mortgage. Now, she would have received the money that she needs to pay off ex-husband and everything's fine. However, this is a temporary thing. Once the coronavirus pandemic kind of goes away and starts to smooth out, the market will come back, because she lives in a good neighborhood in Florida, actually. She lives in a nice place. Her market will come back pretty strong, and she'll be able to sell on her own terms. So what I suggested was that a mortgage is a good idea, but not your traditional regular refinance cash out. Go get an equity line of credit. She has equity in the home, and she had never been presented with the idea of just go get a simple equity line. An equity line is basically just a checkbook on the equity in your house, and you can use what you need when you need it. And generally today, I figured it would be pretty inexpensive. I didn't realize how truly inexpensive it would be. She had never heard this before, went into her credit union, her local community credit union. She's actually a member, and within 2 weeks, I think they had closed a home equity line of credit at 1.75%. 1.75% interest rate, so that she can use that money temporarily to pay off ex-husband. That deal is done. Now she can take a breath. She has very small monthly payment obligations on that. She completely covers that. No worries at all. She didn't have to pull cash out of her bank account or anything like that. So she's now able to keep the home on the market at a fair market price and worry about, where am I going to live next? She did not incur any huge costs to set up a home equity line of credit. Super inexpensive, very low costs, and she can move, and there's no prepayment penalties or anything like that. She can get the house sold and she's fine. She's all set. So the whole thing here is that watch your step. This idea that, I don't want you to get the idea that reverse mortgage is the end-all be-all. It's the same thing with just about anything. Remember, like, maximum retirement income doesn't happen from a product. Reverse mortgage isn't the solution. Investments, real estate, annuities, life insurance, none of those things are the solution by themselves. They might be part of a strategy. So reverse mortgage is not the end-all be-all. And in this case, I think it was a really big disservice that was about to unfold for this listener, Steve. Hello again. This listener, Steve, and his mom. And thankfully, he thought enough, and he thought enough of me. I really appreciate him taking the time to listen enough to say, hey, I know Kraig. So that was absolutely cool. Now, speaking of listener questions, the listener question segment, last episode, I had a great question that came through. A gentleman who had asked a question about an offer letter that his wife had received from her pension company. And this episode is going to be focused on pension decisions. Keep in mind, I understand there's not that many people who actually have a pension from a company or a government entity anymore, but they are out there. You might be listening to this right now and you might be thinking, hey, I have a pension to look forward to. please hear this. And also think about moms, dads, uncles, aunts, anybody that you're listening to this show and you've got relatives, family, friends who might actually have a pension. Please, you've got to share this information with them, because I'm seeing this and hearing this more and more and more now, that people who have a pension with a company or a government agency are receiving letters more frequently to offer to buy out their pension. They're offering a pension buyout that says, hey, instead of your pension, let me give you $1 million. That sounds awesome. And folks are tempted by this, and too many folks are taking the offer. So great question from listener Mike last week. Go back and listen to that, where his wife had an offer to buy out her pension. It was not a big, giant pension, but it was a good, solid number. It was a $600 some odd a month. It was a decent, solid cash flow for this young woman, relatively young. Go back and listen to that episode. But this is a follow-up to that question on the last episode. The follow-up, I'm going to give you 2 short stories. Okay, 2 short stories. One is a story of a client that I worked with several years ago, that she had received this letter. She had come to me to do life insurance planning for her to protect her disabled son. So she had been introduced by her lawyer. She was doing some living trust and estate planning for her disabled son. He has a medical condition and unfortunately brain condition that he will never work outside the home. He'll never really be able to function out on his own. He'll always be dependent. And she was concerned. Her attorney said, yes, we can draft up legal structures to protect his money when you die. But he suggested that she might want to look at life insurance for her son, for her to give to her son, and he recommended me. So I met her through the attorney, and we went through the life insurance, and we definitely got her some life insurance, right? Heaven forbid, hold on, Dave Ramsey would say, never buy any kind of permanent cash value life insurance, right? No, that is not right. This is a situation where a 69-year-old mom, hear me folks, a 69-year-old mom is realizing that the value of her home really doesn't mean anything. She has a very expensive house, but it doesn't really mean anything if she doesn't have a way for her son to actually stay in the home. And she really doesn't have a whole lot of other assets to make sure that her son could stay in the home. Which means that if she died and he received the house, he could not afford to live in the house. He would have to sell the house and maybe go to some strange house or a care facility or some sort of a welfare state situation that she just was terrified of that. She just didn't want that to happen. So how do we take care of people that we leave behind? Life insurance. Well, I'm telling you, someone at her ripe age, she can't get traditional term insurance, Dave Ramsey. She has to go look at cash value insurance. Now, we didn't go after some crazy cash value insurance strategy that was all whiz-bang bells and whistles. It was super simple. Maximum death benefit, minimum amount of premium going in, and I'll tell you what, she will never put in more than her son will receive income tax free. It would be virtually impossible for any investment advisor to create the amount of wealth transfer we were able to do with the life insurance policy that she has and the relatively small amount of money that she puts in each year. There is no way for an investment account to recreate that much money that will go to her son immediately upon her death, income tax free. So I get off track again, but that's how I met this nice lady. We went through the life insurance process and she qualified and it was all good. So we got that done. But part of the review process had overlapped a secondary pension letter that she had. Now, what I mean by that is that she had this pension that it was her secondary pension that she had received from working at a different job, and she had received a letter, right, that said that they were offering to buy out her pension. She had not kicked on, she had to forced to kick it on at 70, 71. I'm trying to remember her age and all of these different times. I'm having my own senior moment right now. Anyway, she received a letter from the pension company that offered her a very, high number to buy out her pension that she hadn't turned on. I think she had to turn it on at 71 or 70. Anyway, she asked me about this letter back then, and I said, whoa, don't take that offer. We did some math together. Her monthly pension income from that company pension was going to be great, and I explained to her that the only reason the company would want to buy her out is because buying her out was actually cheaper than paying her pension. And she got it, and she took my advice, and she kept her pension. Fast forward to we're updating her estate plan and doing some adjustments through my law firm recently, and I asked her, how are you doing? She says, oh, I'm doing great. This what's going on with the economy? It's kind of crazy, she said. And I said, yeah, you're doing all right though, right? She says, oh, I love my pension. That's exactly how she said it. She said, oh, I love my pension. Absolutely love my pension. Thank you so much for recommending that I keep my pension. She has no stress whatsoever about the market. She doesn't worry about the ups and downs of the investments and all of that because she took the full pension and she is doing fine. When the market skips a beat, her income doesn't change. It's like my mom. Her income doesn't change. She cares not what's happening with the investment world because it doesn't cause her any stress. Now, the second story, 180 degrees different. 180 degree different. And just right now, back to back, that this just happened. Now, this individual that I worked with kind of has a double whammy, right? The first one, it's interesting, was connected, very similar to the first story, in that I had connected with this person through a business friend of his who said, hey, this guy Kraig could help you with life insurance. So that's how we connected. It was a simple thing. When we looked into the need that he had, it was, again, primarily to protect his wife if he were to die first, because he was not older, but, in his 50s, and he's thinking, I just need to have something until I retire, and so he insisted on term insurance. Now, I wasn't a big fan of term insurance for him because the odds were very much in his favor that he would outlive the term insurance, and he'll spend a good amount of money getting term insurance at 55 or whatever it was. I had suggested that there would always be a need for some kind of life insurance benefit to cover Social Security lost income someday, to cover pension decisions, those types of things. And no, I've got to have term insurance only. Fine, that's fine. I did the term insurance. Now, fast forward where we are today, and I get a call from this gentleman who says, well, I got the letter. And I said, yeah, I know, we got the letter too, that his term insurance guarantee period is over, and his premium will go from here to here. Boom, it'll go way up. And he said, geez, that's kind of a big increase. And I said, yes, that's the way it works. The term insurance company does not want you to stick around, so they will raise the premium from, let's say $90 a month to $500 a month, and people will cancel that term insurance. Gone, right? So he said, well, my wife is kind of nervous about me not having any life insurance. And I said, okay. By the way, just you and I here on the podcast and here on YouTube, are you hearing in my head, I told you so? Yes, there is almost always a need for some sort of a life insurance benefit. And this idea that you'll never need it, why not? If you can actually put a plan in place to have life insurance, it's almost always a pretty amazing way to transfer money into the future for tax reasons, for all kinds of reasons. It's actually a pretty darn amazing thing when it comes down to it, okay? So that's how I ultimately met this gentleman, and we had gotten his insurance, and then fast forward, the insurance is going to go away. So guess what we're looking at now? 10 years later, we're looking at his permanent life insurance that is going to be substantially more expensive than it would have been had he just gotten it when we talked about it originally, just so he would have a policy that would stay in force for the rest of his life. It would not have been super expensive. And if you'll remember, done right, the life insurance policy will always transfer far, far more money into the future than you actually paid for it. It's a tremendous way to magnify dollars into the future. It's pretty amazing stuff. Now, in addition to calling me about his life insurance, he was also sounding a little bit nervous about the economy. He was asking questions about how I felt about the investment markets and how did I feel about this. Well, the additional piece of this story is that when he started getting closer to making decisions for his official retirement, he had come to me for my opinion on whether he should take his pension. He had a pension, a very nice pension, or whether he should take the lump sum buyout. Well, we did the math. I did the math, right? I whipped out my trusty calculator and I did my math. And I said, oh my gosh, you should not take the lump sum. Even though I am an investment advisor, I can invest that money. I make money charging fees on investments. Financial planners do that, right? Assets under management. And yet, my advice back then was, my advice not that far away actually, back then was, hey, you really should take the pension. The pension is amazing. When you do the math, it's going to be pretty impossible for any investment person, including myself, to match that pension income. Well, he didn't like that answer because the number for his pension buyout was well over $1 million. I believe it was he'd worked for the company for 30 years. So it was a lot. $1.2, $1.3 million. It sounds fantastic. Well, he went to another investment advisor who said, oh yeah, and she said, I can definitely invest that for you. Oh, no problem. We'll cover your income needs. Everything will be great. Well, that sounded better than my answer, which was you should take the pension and don't give me any money, right? Don't give it to an investment person. Take the pension. Well, he actually took the lump sum. And for the first few years of his retirement, things have been okay. I mean, the market has gone up and up and up and up. Well, during this life insurance, snafu that he's now found himself in, where I'm helping him look at permanent insurance to protect his wife because he should have gotten that in the first place, he expressed some questions. He was putting out questions about the markets and so on and so forth. And he finally, I said, so how are you doing? And he says, we are scared. Well, let's just say I edited the words. This whole thing has scared the crap out of us, is what he said. Very bluntly. He says, it scared the crap out of us. And I said, okay, well, what did your investment advisor suggest? Because what's happened, just so you get a picture of this, when you are in a pension situation, or you have a guaranteed annuity type of an income stream or a pension, right? You are in a pool with many thousands of people. So the company that's paying out that income is balancing the income risk, the mortality, over this large group of people. That is mortality risk. That is the actuarial study of the risk of how long people will live and so forth. When you're in a pension, the companies can spread that risk out, and they know their numbers really well. So they know the odds of success, and they play the game very well. Pension companies, guaranteed annuity companies, and so forth. And you've got risk pooling. When you cash out and you put the money in your own individual retirement account, your own IRA, you no longer have risk pooling. You are the only person in the pool. You are 100% responsible for the risk of that income plan. So when the market goes up and your income is fairly stable and your withdrawals are stable, that's fine. But when the market drops, it's called sequence risk or reverse dollar cost averaging. When the market drops and you take out your income, your investment account gets hit twice. You might take out a 5% income and then the market takes out 7%. Whoa, right? The account just basically took a loss of your 5% and the 7% market loss. So now in order to get back to even, the account has to double back up, right? You've got to come up some 13% basically to get past, to break even so that you can take out your next withdrawal. But then you got to take out your next withdrawal. So technically you got to come back up even beyond where you were so that the account could be ready to take your next withdrawal. That is sequence of returns risk. That is the big, big risk when you are in the pool alone. Now, this is the situation that he found himself in, right? When you retire and then the market goes up and everything's great, okay, good. But now I asked him, so what did your investment advisor suggest? Because he took a pretty good hit in his accounts. Didn't matter how well diversified he was or anything. The whole world has taken a hit investment-wise. It's inevitable. He said that her advice was that we might want to consider taking out less money this year. What? That was the answer? That's one of the, that didn't help them. That scared the crap out of them even more. Whoa. You're saying that the plan, I really should actually take less this year? That we got to cut our lifestyle back? Yes, that was the advice. Folks, all this to be said, all this to come around to say that if you have a pension to look forward to, or if you have a pension that you're currently receiving and you receive a buyout letter that says, hey, by the way, if you'd like, we'll give you a lump sum of cash to stop your pension income. Those letters are going out, folks. I'm telling you. If you receive an offer to buy out your pension, or if you're looking at retiring in the next 5 to 10 years and you're looking at your pension options, now is the time to do some planning with a retirement income specialist. You can reach me, Kraig with a K, at kraigstrom.com. Please, if you know anybody who has a pension to look forward to, whether it's teachers, fire, police, any kind of city government, state, please, before you take your pension decisions, contact a retirement income specialist, someone who focuses in this specific area of retirement planning, and make sure before you make a decision on it. Now, folks, that's going to wrap it up. Please, always send me an email, Kraig at kraigstrom.com. Thank you again. Oh, by the way, thank you to Bob, Andy, Pete, Madeline. Thank you so much for the recent 5-star reviews on iTunes. I so appreciate it. It really is fantastic. And if you actually like the show, and if you actually click with Kraig, the income engineer, please take a moment over on iTunes and leave a 5-star review. If you don't like Kraig, me, the income engineer, please stop listening to the podcast and go find somebody that you do like. Don't spend time leaving a negative review. That's no fun. Bye for now, folks. Take care.
Thank you for listening to the Personal Pension Radio podcast. If you missed anything during the show, that's okay. We took the notes for you. Check the show notes for links, offers, and a full transcript. And don't forget to head over to personalpensionradio.com and download your free retirement income report. While you're there, we would appreciate some iTunes love. Please leave us a fantastic rating on iTunes by going to personalpensionradio.com/iTunes. Thanks again for listening. Now for the disclosure. Information presented is for educational purposes only and is not intended for solicitation, sale or purchase of any security or financial product. Be sure to first consult with a qualified financial advisor and your tax professional before implementing any strategy discussed here. The term personal pension refers to a marketing name designed to educate future retirees and retirees about the economic principles behind creating their own pension-like income. The term personal pension is not intended to be confused with a defined benefit pension plan offered by an employer or by a government entity.